Good afternoon, everyone. In today's video, we're going to focus in on the Nasdaq, and I'll show you how to spot when the Nasdaq is out of sync in terms of volatility and how to take advantage of this volatility. We'll look at both the futures markets along with some tech stocks. Now let's start first with taking a look at our morning volatility for all 10 major futures markets we look at. This gives us our bearings in the first place to determine which markets we want to focus on, which markets we'd like to ignore. Now in today's case, if we focus in on the volatility note and we take a look at just the index markets here, so let's zoom into only the index markets, we'll plot this on our timeline that you see, and this timeline contains the 5 volatility box models we have. Think of this as a volatility scale ranging from 1 to 5. 5 is your most conservative, 1 least conservative. There, inside of the markets today, the S&P 500 and the Russell were on their aggressive, but the Nasdaq was on its scalper volatility box models. So the Nasdaq is on the far left, scale number 1. Now the S&P and the Russell next up on their aggressive models, but the Dow far right on its doomsday conservative models. So take a second to just stop and think about this. At the same exact time, this is 7:25 a.m. Pacific, the Nasdaq is on the far left on our volatility scale, the Dow is on the far right of our volatility scale, and the S&P and the Russell are somewhere in between, slightly closer to the Nasdaq. What do you think is likely to happen as the day progresses? If you guess that the volatility is going to increase and this volatility would get closer and closer to converging to the Dow, you guessed correctly. That's exactly what tends to typically happen. So this is our first clue right here. It's our morning volatility clue, and it's our hint that, hey, one market is a little bit out of sync compared to the other markets. Whenever we notice some of these clues, I'll do my best to include it inside of that note. So today, for example, you'll see next to the Nasdaq, we have I expect volatility here to increase given the S&P, the Dow, and the 30-year note, which had already broken outside of its doomsday conservative clouds. So across the board here, we had clues that the Nasdaq market was the market to focus on, the market out of sync, and the market where you expect volatility to increase. Now let's see if we were right. We'll jump to our Thinkorswim charts here and take a look at the Nasdaq. Now let's start with the Nasdaq futures market here first, and we'll start with our scalper models. Now when the futures markets opened this morning at 6:30 once the bell rung, and we really had about an hour's worth of activity, price inside of the Nasdaq was mostly chopping in between of our scalper volatility box models. In fact, towards the end of that hour, we breached the upper cyan line, and this is now where we're looking to see what is happening from this point. Do we have buyers driving price action up outside of our clouds, up above here? Or do we see sellers defending this action, and there's some sort of back and forth that takes place where they can hold this level? What ends up happening is the sellers defend this level. That is our sign off that, hey, the scalper models are being respected. We can continue to use them. Now, as this next hour progresses, that's where the volatility very quickly increases. Now, by the time we've sent the note, which is 7:25 right around here, we're still on the scalper models. The scalper is being respected. However, as soon as that second half of the hour kicks in, so the 7 to 8 a.m. Pacific hour, you can see how that volatility very dramatically increases. Now, as price action is going outside of our clouds, we need to adapt and switch to different volatility models. So here, price has breached our cyan line, and we're checking, hey, do we have our overbought signal? Now, the overbought signals don't come till right here, and this is on a 1-minute chart, the most aggressive we can get. So the first sign that we have that we're in overbought territory is 7:45 a.m. Pacific. All of this price action up until then, we're adapting through. So the scalper is broken. We adapt through this volatility. We get to the aggressive volatility box models. Same thing, we breach our cyan line, but here one more time, price goes outside of the clouds before we've seen our overbought signals. One more time, adjusting to volatility. That takes us next in the line to our doomsday aggressive models. Here we repeat the same process. Price breaches our cyan line. Here we do see our overbought confirmation signals before price goes outside of the clouds. So this right here is our sign that, hey, our fade setup rules are being met. We have an entry to go short inside of the Nasdaq. Now, given the entry took place towards the upper edge of the clouds, your risk on this could have been reduced to just 19-ish points inside of the Nasdaq compared to what is the typical risk for this trade, which is closer to about 38 points. So you got a chance to cut your risk in half purely because of how deep into the clouds we went. But here, say you're not a futures trader. So this futures trade did end up working out really nicely for the short side opportunity, but perhaps you don't focus on futures or even micro futures. There, we had tech stocks which displayed volatility during the same time in a short side setup. Let me show you some examples. AMD was the clearest example of a short side setup, and here AMD is giving us the same short side entry. When it's breaching its daily volatility box models, you can see price action gets into our daily models. We have a series of our overbought signals, and you can see the fade that takes place. The trend exhausts right into the daily models. Now, why AMD, you might ask? Well, let's take a look at some other tech stocks. If we came into Google instead, Google did not breach our daily model, so a little bit less volatility compared to AMD. What about Microsoft? You'll notice something similar. A little bit less volatility compared to AMD. What about Apple? Inside of Apple, you should notice less volatility than even Microsoft and Google. So now you're getting this feel for where do we have more volatility, stock like AMD today? Where do we have volatility that's rising and we're waiting for an entry for? And where can we find the stocks in which there's very little volatility? Now, if you want an example of a stock which had a lot of volatility, Nvidia is really the perfect example from today. The same time we're looking at the AMD and the Nasdaq setup, price inside of Nvidia has already broken outside of its conservative daily models. So that gives you an idea of just how volatile Nvidia was today. And finally, the last tech stock that I'll walk you through is Tesla, in which you should notice, very similar to Apple, much less volatility compared to what we would have been expecting given the type of day we had. So that gives you a variety of volatility opportunities. The live scanner, of course, will find all of these for you and just give them to you in a list. And that's where you can find opportunities like the AMD one, or even focus on things like the Nasdaq futures if you're simply looking at the futures markets and using that to take advantage of the volatility mismatch. I hope you found this video useful in demonstrating how to spot the morning volatility clues and actually do something with that information. Take care, everyone. Good luck trading, and I'll see you in our next update.